Good morning. Thanks for joining us for another market update. I'm Brooke Gardener at Morgans, and we're giving you a bit of an update of what our last week was in reporting season, as well as a bit of a macro comment. So at the moment, obviously, we're seeing quite a large sell-off in markets globally, as well as here in Australia, largely led by concerns about the global spread of coronavirus. Surprisingly, markets did ignore this early when it was just seen as a bit of a China issue. However, we've now seen, once that we saw the sort of spread more globally, is that markets took a real risk-off approach. So for me, I guess the way I've been playing it and the way we're seeing it with our economists and macro analysts is that we were selling in January, so we were sitting on larger cash positions. That was actually largely just out of concerns on earnings growth and where the market was sitting on valuations going into reporting season. However, we've seen coronavirus was actually the real impact. The market was seeming happy to look through what were some lower earnings growth. So at the moment, we're taking a hold approach, continuing to wait to see what's coming through in terms of news flow, and then getting ready to really start buying this negativity, because we're seeing some quality companies are finally looking at better valuations. So that's how we're looking to play that at the moment. So a bit of a wrap, we had a really large week last week in reporting, so I'm trying to go through just a few companies to give you a bit of an idea. So firstly was A2 Milk, a great result by these guys. They beat consensus. I guess there was concerns about, and they'd sold off into the result, concerns about, that large export exposure into China. Not a concern at all. They had noted great sales out of China, and that's probably because of the quality of the product, and that people actually, during this sort of concern period, are actually pulling through plenty of buying because they want security of product. So, they've had a really good result, and we've had, I think they'll continue to do well. Another one was Adairs. This is a retail exposed company, but they're really well leveraged to an improving housing market with linen and a little bit of furniture as well within the business. And they also were in line with guidance, and they're seeing that they're going to see the benefits and continue to improve over time. So that's definitely one to watch. Really good management team there as well. So we also saw Afterpay report last week. Now, these guys had really strong top-line growth. We've seen great improvements in the business in terms of the US and how that's growing at sort of quite exponential rates, really. And they also talked about expanding into Canada, and as well as obviously they're already in the UK and launching that business. So these guys look to be really well positioned. This is a company that does move around. It is quite volatile, and in this type of market is going to continue to be. But they have had a really great runway for growth and continue to appear to be a great growth business. So AP Eagers on car sales has reported these guys have finalised the acquisition of AHG Group. Now, this was a pretty messy result, bringing two companies together. However, you've got a really great management team that are executing on that. This is one to watch because car sales have been pretty abysmal for quite some time now, and if we can start to see a little bit more of an improvement in that car sales environment, that these guys will be really well leveraged to improve from that. So this is one we're going to continue to watch. Also, AFG reported, which is Australian Finance Group. So these guys are also really leveraged to the housing market, of course. We're talking mortgage brokers. These guys beat consensus on their results, posting really strong growth. These guys are also sort of looking to have really strong growth into their next half and for their full year as well. So that one is looking positive for those looking to continue to get more exposure to that housing recovery. Staying with housing, or with property, I guess, is Cromwell Property reported. Now, they have reported above expectations as well, and that's largely driven by performance fees in their funds management section. Now, the business has not changed guidance, but they've got great revenue and earnings coming through. 80% of that's coming through from property, the balance of that then coming through from funds management. So these guys are, continue to be a good position in clients and a hold clients in portfolios with great income. Switching tact from property is moving over to digital. Data3 reported with a very strong result. Data3 are, leveraged to that big tailwind of digitisation and moving to the cloud for a lot of businesses, and they've posted great guidance with 41% year-on-year growth in earnings per share, which is fantastic. And these guys continue to sort of move ahead in that race, I guess, with data and what they provide. So they're looking really strong for the year ahead. Now, in terms of coronavirus and impacts, one of the key areas has, of course, been travel. Anyone that's exposed to travel or tourism has really been sold off in this current market. So Flight Centre, one of those reported last week. Now, I think the result was there was a downgrade in there, was better than the market was expecting. So it moved actually up last week on that result, and that's just because it was sold off so heavily. Now, these guys, great management team, of course, have been around for a long time, and I guess these guys will be ones we're watching during this type of event with viruses, because they will rebound at one point, and it'll be looking to see where you can pick up that quality going forward. Now, onto a little bit of a morbid topic. InvoCare reported last week. Now, these guys run funeral homes, and they run quite a large business within that, not just in Australia but also overseas. And they have reported a great result. They beat expectations. That was largely coming off lower numbers of deaths previously to that. They've also gone through a major premiumisation of their product, and they seem to be winning business and increasing on the back of that. So whilst quite a morbid area to consider investing in, it is quite a resilient, obviously, business and quite defensive. So these guys saw quite a strong share price movement on the back of that result last week. Now, Motorcycle Holdings, these guys have quite a small business, but again, similar exposure. They're the largest, though, consolidated motorcycles company in Australia. Similar to car sales, though, they have experienced a really tough period of time, and I guess we're starting to see some green shoots. And the biggest time, I guess, when we look to buy companies is when they're in their toughest times, and these guys are really well leveraged, given they've done a large cost out of the business, to start to see benefits. We see normalisation come through on those motorcycle sales. Now, Reece is another that is also leveraged, of course, to housing. We saw these guys post a result above our expectation. We saw really strong growth in their US business, with 19% growth in revenues. Reece is an amazing business, founder-led. Family's been in the business for a really long time, and the US acquisition is a very similar business in terms of structure, and founder and family invested and led. And these guys have given very strong, ongoing, consistent revenues and returns to clients. So, it's a really interesting, I think, business for what is rather boring in terms of plumbing supplies. But these guys have shown, once again, they're a really good quality company. So, a good result from Reece, and again, fairly resilient and robust business. Now, Rio reported right toward the end of the week, obviously a very large holding for a lot of clients, given how large they are within the ASX. So these guys reported a really strong result, not surprising given the iron ore prices over the last half. So really strong revenue and earnings coming through. They've posted, a record dividend, which is great. It's going to be really well received by shareholders, having that really good income stream. And then also they have noted, though, that it might get some impacts coming through on coronavirus, and obviously definitely resources have been impacted in that sense, I guess, with concerns around growth and that demand coming out of China. And then finally, I'll finish off on Woolworths. So Woolworths, we saw report really strong result. All operating divisions performed, I guess, better than expected. They have noted a little bit of a weakening in this the second half now since January in some of those sales revenues, but largely, of course, a very defensive business, and a fairly mainstay for clients. So I'll leave that there for this week. Thanks for tuning in, and I know it's been a long wrap, but keep an eye out for more of these as we move through reporting season. We're going to have a lot of companies coming in to report now and speak with us after reporting season, so I'll love to keep chatting with you and giving you updates on what we're hearing in the market, and particularly during this particularly volatile period of time. So thanks for tuning in.